Today we'll be seeing in some trial balance is given in the question, and we'll solve a sum. It is based upon final accounts with adjustment. While solving a sum based on final account with adjustment, always try to solve first the adjustment. Okay, first of all, you draw the format in your copy, respective formats like such as trading account, profit and loss account, and balance sheet. After that, first of all, you calculate the try to solve all the adjustments. Like in this sum, we have number one adjustment is depreciation, land and building, plant and machinery, office equipment and furniture. Yes, so depreciation, we know if depreciation is given the adjustment, what we have to do, we have to charge depreciation on the respective assets, and we have to show it in the PL debit side, and in the balance sheet asset side we have to deduct depreciation from those assets respectively. These two calculation will be doing for the depreciation. First adjustment you will be doing in PL account debit side, depreciation you will be charging on the asset value multiply the depreciation rate, and whatever the depreciation you are getting amount, that you will be subtracting from the asset in the balance sheet asset side. This will be the first adjustment. Second, they have said create provision for doubtful debt at the rate of 2% on sunny debtors. So in this question, just they have asked you to create provision for doubtful debt. So on sunny debtor, you just multiply the 2% with the provision for doubtful debt. Sunny debtors, you multiply the 2%, you'll get an amount such as 800. That amount will be showing the PL debit side, and that amount will be subtracted from sunny debtors in the balance sheet asset side. Next, insurance premium includes rupees 250 paid in advance. This is what prepaid expense. Prepaid expense is considered as an asset. So whenever you are having a prepaid expense in the sum, what you will do, you will subtract that prepaid expense from that respective expenses from in the PL debit side. Like two insurance will be writing in the PL. Insurance is the PL item, so we will be writing two insurance in the PL debit side, and from that amount we will be subtracting the prepaid insurance, and prepaid insurance will be showing the asset side. Okay, prepaid expenses are shown in an asset side. Next, provide salary to Subham. Subham is the proprietor, and when we are providing salary to the proprietor, two treatment we will be doing. First of all, this is an expense for the business, so it will be going in the PL debit side, salary to the proprietor. And second thing, it is a liability for the business, so it will be shown in the liability side. Okay, as it is a liability, business has to owe to the proprietor at 15,000 rupees, so it is shown in the liability side. Next is outstanding salary is 11,500. This is salary to the employees. So basically salary is an PL item. Two salaries will be showing in the PL debit side, and in that salaries only will be add outstanding salaries 11,500, and outstanding salaries is also a liability amount. It will go in the balance sheet liability side. Whatever adjustment entries are given, we will be doing two treatments. Each adjustment has two treatments. Okay, it must be it will appear in two respective accounts, either in trading, PL or balance sheet, any of the two. Okay, so each adjustment has two treatments. Okay, next is that 10% of the net profit is transferred to general reserve. Acha, what does this is a little bit typical adjustment. Acha, after doing up to here, we will be moving to the sums, and then we will do the calculation later on. In this sum, we have adjusted purchase. So when adjusted purchase is there, we don't have to take opening stock and purchase separately, as it is already calculated. Okay, so we don't have to take opening stock and purchase separately when adjustment is adjusted purchase is given. Adjusted purchases, wages, carriage inward, these all are trading account items. All direct expenses are recorded in the trading. In credit side, we will be writing by sales less return. Closing stock is not appear. Why? Because closing stock is mentioned in the trial balance. So when closing stock is mentioned in trial balance, it will be shown in the directly balance sheet asset. It will not be appearing in the trading account credit side when it is given in the trial balance. Okay, so as closing stock is given in the trial balance, so we are not showing closing stock in the trading account. We are showing it directly in the balance sheet asset side, closing stock. Okay, after placing the respective items of the trading account, we will get the gross profit. That gross profit has to be transferred to the net profit in the opposite side by gross profit BD. After that, respective whatever the indirect expenses are there, we'll be posting in the PL debit, and incomes will be writing in the PL credit. Indirect expenses such as salaries, office expenses, carriage outward, discount allowed will come in PL debit, discount received will go in PL credit. Bad debt PL debit, it will be shown. Subhash loan, one item is there in the trial balance which is given in the question. Subhash loan means you have taken loan from a person Subhash, and they have mentioned a date on which the loan has been taken. It highlights that you have taken the loan but you have not paid the interest, so it will be you have to calculate interest on that loan. Loan amount is 25,000, is mentioned in the question. So 25,000 into 18% for 6 months, because from 1st October if you calculate up to 31st March, you are getting 6 months, means 6 months interest on this loan is due, outstanding interest on loan. So 25,000 into 18% into 6/12 12 if you calculate, you'll get an amount 2250, which is your outstanding interest on loan, which will be shown in PL debit side, as well as it will be showing the liability. Why? Because it is outstanding interest. It is a liability for the business. Insurance is your PL debit item. Commission is your income, as it is given in the credit side, will be showing the PL credit. Furniture, fixture, bills receivable, this all will go in the balance sheet. Sundry debtor, balance sheet asset. Sundry creditors, balance sheet liability. Cash at bank, balance sheet asset. Office equipment, this is also an asset, balance sheet asset, it will be mentioned. Bills payable, it is a liability, balance sheet liability side. Expenses payable, it is also a liability item, it will show in the balance sheet liability side. After placing the items of PL debit and PL, placing the items in profit and loss account, you will take out the net profit. Achha, one thing you must remember, in this sum they have mentioned that 10% of the net profit is transferred to general reserve. So without writing the net profit directly in the format in the copy, you must calculate the net profit in the calculator first. Whatever net profit which you are getting, of that 10% you have to calculate. I think 31450 is the amount which you are getting on the net profit, that is 3150. 10% of 3150 you have to calculate, that is 3145. 31450 is the net profit which you are getting, but you don't have to write it directly in the copy. You have to calculate 10% of it. 3150 10% is 3145. That 3145 rupees will be transferred to general reserve. It will be shown in the PL debit, as well as it will be shown in the balance sheet asset side. Whenever you are getting this kind of treatment, adjustment in the sum, you must remember that first of all you will calculate net profit in the calculator. Whatever the amount you are getting, out of that whatever the percentage which is asked in the question, you will multiply that percentage. You will get the reserve, general reserve, that will be showing the PL debit, as well as it will be showing the balance sheet asset. Okay, after putting that amount in the PL debit, general reserve to general reserve, then you will calculate a new net profit, which you will be getting simply just subtracting that general reserve amount from the net profit which you got earlier. Whatever net profit you are getting, that will be your the final net profit for the sum. After getting net profit in this sum, we are moving to balance sheet. Balance sheet, first of all, capital. Opening balance, which is given in the question as usual. Opening balance, if any drawings is there, we will subtract, but in this sum no drawings was there. After opening stock, opening balance which we wrote, after that opening balance here refers to the opening balance of the capital which is given in the question only. It is not opening stock. Okay, so in that drawings we used to subtract, but drawings is not mentioned. We will be adding net profit with that. After adding net profit, we are also adding the proprietor's salary, as it is an expense, the business which owes to the proprietor. So salaries payable to the proprietor is also added with the capital amount, and amount is shown, final amount is shown outside in the outer column. After that, remaining entries such as bills payable, expenses payable, all remaining entry which are liability sundry creditors, that will be shown in the liability side. And remaining all amounts of asset, balance sheet assets will be shown, such as bills receivable, cash at bank, next sundry debtors, closing stock will be mentioned. I have already informed. Land, building, furniture, office equipment, plant and machinery, bills receivable, sundry debtors, this, and outstanding salaries will be shown in the balance sheet liability. Prepaid expenses will be shown in the balance sheet asset side. After doing this calculation, when you will do the total, you will get the answer matched.